Hello and welcome to this ET Now special. I'm Nayantara Rai. Well, it is our birthday week and we're turning into a teenager, and we promised you appointments with the tall leaders of India Inc. And with that, I'd like to now invite Mr. Sanjiv Mehta on ET Now. He's of course the top boss of HUL and the FICCI president. Mr. Mehta, thank you so much for giving us this appointment. It is our birthday week.
Always a pleasure, Nayantara. And first and foremost, congratulations to ET Now. I think you all have been on a remarkable journey. I enjoy watching ET Now and I wish you all the best. I'm sure better things are yet to come.
I only hope you'll stay tuned in and will also give us valuable criticism, constructive criticism, so we only improve every single day.
Oh, absolutely. That's what it should be. One should be a student and a learner throughout your life.
Thank you for that, Mr. Mehta. And now I'll get down to the interview for which our folks are tuning in. There's so much to talk about. Should we begin first with the global gloom and doom, the ECB calling for an ad hoc meeting to discuss the market route? We will have the FOMC outcome very soon. Markets feel that 75 basis points is pretty much a rate hike that's priced in. The market volatility, inflation, 40-year high. Mr. Mehta, how are corporates navigating through all of this?
Yeah, it needs no gainsaying that it's a tough economic situation. And it's a tough economic situation not just in one part of the world, but across the world. Yeah, there are many factors which could have contributed towards the high inflation that we see. To start with, there were the supply chain constraints due to the pandemic. The second one, of course, was the conflict between Russia and Ukraine, the geopolitical crisis. The third one I would also say is that which is now in many ways accelerating the crisis is China's policy, and this would result in more disruptions to the supply chain, the kind of restrictions that are happening in China for their way of curbing COVID. And while it's not talked about as much, in many parts of the world, there was huge amount of fiscal stimulus during the COVID period.
Not talked about? I think you're being a little charitable there.
I'm saying that could also be one of the reasons why we are seeing the kind of inflation. And this inflation is biting everyone. Yeah, if you look at the US, the largest economy in the world, the 8% inflation, they haven't seen it in 4 decades. If you look at our country, and 14 consecutive months of double-digit wholesale price inflation, and while we are pleased that there has been a bit of a trend break when it comes to consumer price inflation, but still too early to say whether it will sustain going forward. I think the concern always is that inflation bites the poor much more than the rich people.
Of course.
And for us as a country, we were on a great recovery path. Yeah, but now with inflation coming in, it requires a very astute and adept balancing act to ensure that the growth does not stall, but at the same time we are able to contain inflation. And it was heartening when you read the latest World Bank reports, Nayantara, that while they're alluding to the fact that in 2022, this year, the global growth rate would be half that of what was there in the previous year, they still believe that India would be growing this year and next year at above 7%, and which would be amongst the highest growth rates.
And with that, Mr. Mehta, I'd like to ask you one question, which is, first up, have we started to see a slowdown in the rural economy because of inflation? We have the promise of a good monsoon, but we have also grown in 2020 primarily on the back of Bharat.
That's right. You know, one of the things we should be conscious about, that whenever you look at growth rates, you generally look at it from a lens of the same period last year. Yeah? And there have been various distortions because of the base effect. There was a period when we went in for a lockdown, the urban growth got impaired. Yeah, then there was a period when urban bounced back because they had a weak base. But if you were to just step back and look at the math numbers still both urban and rural, if I were to take as FMCG, all the categories in which HUL operates, and we are the company which operates in the widest of categories, the headline number is still positive. Yeah? But the concern is the volume growth. The volume growth is veering towards now, the rural has become negative and urban is just keeping the head above water on a MAT basis. When you look at it from your last 3 months basis, then of course the volume growths are negative, both urban and rural. And that is a cause for concern, obviously, because FMCG products are daily use products, and we do not have a high base in the country. Our average per capita consumption is just $45, and rural is 1/3 of urban. It's $25. Urban is $75. So it's a weak base. You know, forget comparing with the US. Even when you compare with, say, China, it is 1/3 versus Indonesia is 1/4. A half against Indonesia, 1/3 against China, and 1/4 against Philippines. So it's a very small base.
And so how will then the volumes come? Because
now volume
will we shrinkflation? Will we see smaller packaging?
No, let me explain. At the end of the day, your wallet is limited for most people in our country. You know, while we are a $3 trillion economy, our average per capita income is just about $2,000. And that also is highly skewed, right? So the money is limited, and people then titrate towards more essentials and what they believe they need to do. If your money is limited, and if that same amount of money is going to buy you less volumes, then it is very natural that the volumes will come down. Yeah? And there are certainly certain categories where the impact of inflation has been more severe. For instance, toilet soaps, which are based on vegetable oils, palm oil. Yeah, that's got impacted severely. Or if you look at detergent powders, which are based on crude oil based derivatives, yeah, chemicals. So that have again been impacted severely. So what happens is that when there are large packs, you take a price increase on them because they cater to people who can afford to have a larger outlay. But people who use small price packs or low price point packs, like a 1 rupee pack, a 2 rupee pack, a 5 rupee pack, a 10 rupee pack. Now there, you can't take a price increase from 5 rupees to 5 rupees 25 paise. It doesn't work. Yeah. So what you do, the companies do, is adjust the volume.
So shrinkflation.
You do, but the shrinkflation is only up to a point.
Have you reached that point?
You have again different products, different categories. But for some categories where you reach that point where you reduce the quantity further, it will impact your product efficacy or product experience. Then you can't go below that.
Like you can't sell less than one use of a shampoo, right? I mean, you can't sell wash half your hair.
Exactly, right? So then you look at, okay, I'll take a hit on these margins, but up to a point. Then you also look at bridge packs. How do you bring in newer packs where the cost of packaging is lower, but the value to the consumer is higher? Yeah, so different things would have to be done.
You mean like you can buy like hypothetically, a toilet soap with, let's say, detergent powder. I'm giving hypothetical. Is that what you mean?
No, I'm not talking about cross branding. Yeah, say for instance, just as an example, if there is 10 rupees, you're getting something of 10 grams, yeah, then you may increase the price to 15 rupees, but instead of 15 grams, you may give 17 grams. Yeah. So what it does is your cost of packaging goes down, but the value to the consumer goes up.
But Mr. Mehta, the worrying part will be because if volumes go down, and you said in the last 3 months, both urban and rural have hit the negative territory. Are we staring at a point where just now capex cycles were turning? We had started to see big investments, a lot of consolidation as well. But is capacity utilization, is that threatened? Can that come
It will
down?
be if this continues for a long period of time.
What is long?
You know, again, it depends on, say, another year, 2 years. Now, if we look at a
So not 3 months, 6 months where we could see capacity
say
utilization.
a company like ours, we don't run the business on a 3-month, 6-month horizon. Our capital investment is intact. We keep investing. We are here for the long term. 6 months, 9 months, doesn't matter. Even 2 years won't matter for a company like ours. But for many others, you know, we are a zero debt company.
Correct. Your situation is different.
Situation is different. But for many people who invest in capex, when you reach a certain threshold of capacity utilization, and if your volume comes down, then of course they would pause on investments.
Because
That's
so
very
far, sir,
natural.
the stock markets have, the forecasts at least, are not giving earnings downgrades for the next financial year.
You know, look at it like this. Earnings downgrade, earnings would depend on your headline growth,
That's coming down.
which would depend on price growth. Yeah. So this year there will be price growth. So headline growth will be right. Now your earnings would depend on your ability to leverage scale. It would depend on your mix of products. So some good companies would still be able to ensure a healthy earnings per share even in this construct. But long term, high inflation is neither good for consumers nor good for the economy.
And with that, I'd like to also bring about another point, which is we can talk about imported inflation and all of that. You've anyway talked about the edible oils, palm oils. Mr. Mehta, now we have crude, which is stubbornly stuck at $120 a barrel.
That's right.
Other commodities are still coming down. Crude is not. And the double whammy is rupee, the all-time low.
Now let me tell you a scenario where I'm still confident that as a country we will be able to wade through the crisis, navigate through the crisis. Why things are a bit different. And just like I said, World Bank still believes we'll be the fastest growing economy. That indicates an innate sense of confidence in the Indian economy. Yeah. Talking about rupee, the situation is not of the past because we still have got $600 billion of reserves, yeah, which augurs very well. The second important bit is it will require a very tightrope walk in terms of monetary policy. How do you ensure that there is sufficient liquidity? How do you ensure you don't throttle growth, but you still contain inflation? So it would require, and we have got a very competent governor in Mr. Das, and I'm sure he would be able to do that. And both the monetary policy and the fiscal policy will have a role to play in ensuring containing inflation and ensuring growth. For instance, if you look at the last readings that have come out on consumer price inflation, and thankfully, it's been a bit of a trend breaker, thankfully, from 7.8, 7.9, it's come down. And I believe that the government steps that they have taken to reduce excise duty on fuel, that will have a bigger impact in June.
In June, you're expecting. Yeah, that everybody is saying the past.
Yeah, it should have. But yes, what we need to see also is the price of vegetables, price of potatoes, price of tomatoes going up significantly. Now, in this context also, there is an opportunity lurking in the corner. If we can increase the yield of our crops, if we can monitor real time the prices that are prevalent of different crops in the world and use this opportunity to grow those crops where the yield will be maximized, then we could also have a situation where the farmer's income goes up more than the cost of inputs.
We'll have to see if they want to attempt any more farm law reforms in the run-up to the next general election. An educated guess. It looks
like I said, there is an opportunity lurking in the corner.
Yeah.
And for instance, when you look at this hyperinflation, a corporation like us, what do? We look at two imperatives. One is, how do we ensure that the consumer franchise remains with us? What we also call as market shares, volume and value. And a company like HUL, our market share gains have been the highest we have seen in the last decade. Yeah? And that augurs very well going into the future. The second important bit is, how do you protect your business model? Now, these are not easy to do. Yeah, it requires a significant amount of ingenuity to play
like
both the games. Not like a super app, but
it was a joke.
I know. But honestly, it requires playing different variables, because to protect the consumer franchise, you have to ensure that the consumer value equation remains intact.
Correct.
Yeah. At the same time, you have to ensure that your business model remains protected to a large extent, on a relative basis. But yeah,
so as you figure all of that out, and this is my last question to you because I know we're running out of time. If you're going to, we're seeing foreign investors exit the stock markets in India, press the sell button, and with a lot of velocity. But for the real economy, my question to you is, if foreign investors, either out of choice or for whatever reasons, will not be in China, will not be in Russia, how can India seize this moment, and are you seeing double downing?
First there would be many liquid funds who are fair weather friends. They move in and out. But at the same time,
I meant MNCs, that's what I was saying for the real economy.
Our commitment to the country is long term. We are, as Hindustan Unilever, the second largest Unilever business in the world, with a very clear aspiration to become the largest Unilever business in the world. So for us, these are challenges, these are headwinds, and we have been trained to navigate. A commitment to India and belief in the India story has not waned any bit. I'm very optimistic that this is going to be India's decade and beyond.
For giving us this time.
Absolutely.